Alright, this video we're going over the types of markets in the market. Okay, that's so fucking stupid. Alright, in this video we're going everyone, so in this video we're going over the types of markets. There are three types of markets that we usually see in the market. There's a trending market, which means there are higher highs and higher lows. In a bear market, lower highs, lower lows. And in these trending markets, you have the opportunity to stack trades and catch more pips on the same move. In the consolidation or ranging market, over here, you have an explicit resistance and support level to trade, to bounce back and forth from until something breaks. And choppy market, there is no clear support resistance, or there are multiple ones that is not really as defined, and then there's no clear direction of where markets are going. Now you guys can take a picture of this, jot it down, but we're going over to the charts. Okay, so this is pound. This is the pound Aussie, and this is one of the trades. This is one of the pairs that I trade. So let's define a trending market. So a trending market right now is, let's see the trending market. So a trending market, this is an uptrend. Okay, in an uptrend, you will be buying the lows, and you can sell at the highs or close at highs, or you can stack. So in a trending market, so let's go from here. The trending market, fibs, I usually use fibs for entries, and when fibs line up with trend lines or previous levels of support or resistance, in this case resistance, I would go long. So the red levels, I'll go into fibs in a bit, in the later videos, and then there's a trade. Now if you kept your trade and prices came back up and comes back down to the trend line, you would pull your fibs again from the low to the high. Let me erase that fib, erase this. Actually, don't erase it, you're keeping this trade. And then you go long on the retest of the trend line and also a fib level. Now targets and stop loss below the trend line. And then again, it flies, so you would draw your fib again, and it is a 32 entry, so you enter on a 32, or you don't have to enter. Let's say we did not enter, so we're holding two positions. Okay, so that is how you try to trade your trending market. Now on a consolidation market, so this is an uptrend, now it's in consolidation. Consolidation, again, we have explicit resistance and support levels to trade or bounce from. Okay, so this right here, this whole thing is consolidation. Okay, so this is resistance. Resistance will be up here, and support down here. Okay, so let's zoom in. You guys, again, we're bouncing from support resistance in choppy markets. So the first trade would be, actually, in order for it to become a choppy market, you would need time to see that it's a choppy market. So in this case, it's not really, it's you can see it's consolidating. So around this area, you know it's consolidating. So you would place your buys. Oops, wrong one. You place your buys, stop loss below the previous low, and then take profits would be your resistance in this consolidation. So that's almost a 1 to 4 trade. So that there is one trade there, and then you'll be swinging it back down, taking it back down from the resistance down to support. So there is one trade. So right here, these wicks, you have to be careful of these wicks over here. You can just enter at these wicks as well, now that you know it's consolidation. There's another trade. And then there is one last trade here. Try to take it, and then stop loss. Again, if you put stop loss below here, you will have been wiped out. So maybe you would have been wiped out on this trade. Let me see how many stop loss. Stop loss right here on this consolidation trade. You might have been wiped out, but with the nature of the pound, you have to be careful. So we would have been wiped out on that trade because that was they probably figured out that we were trading in this range. However, it was a retest of this trend line. So you guys have to make sure you have to be aware of where your trend line is. That's why you extend it out into the future, and also the zones, because not every support resistance is a fixed price point or line. Okay, now again, you swing it down. If you try to swing it back up, and you put your stop loss below this wick, they took it out as well before moving it back up into profit. So that's trading consolidation. You need to be careful of stop hunts on these below support or above resistance. Okay, and then a little bear market. So trading bear markets and bull markets is pretty much the opposite thing. Trend line, you will get in on a trend line at the retest. So with fibs, that is not how I draw fibs. Fibs, 4-hour wicks, and you enter on the touch fib level. So just to show you guys, so we touch in fib level above, stop loss above this trend line, and then you take profits. Okay, so that is one trade, and then a touch. I'm not sure if there's a fib level there, but a touch of the trend line, and then goes down. And then we are in a new market now. So again, draw your trend lines, and then a break, impulse move, break. You draw your trend line, and it doesn't really match up that well. This is a 4-hour. Keep in mind, this is a 4-hour. It doesn't match up that well. However, the break you get in on the impulse leg. This is consolidation, so you got in here, got in late to the claim. Take profits there. Stop loss below the trend line, and it flies. So this right here is your steep trend line. Oops. Very steep trend line. I don't suggest drawing this trend line, as if it breaks, you would mistaken it as a reversal. Okay, so that is pretty much it for trading the 3 types of markets: the trending market, whether it's a bear market or a bull market, and also a consolidation market. Now with choppy markets, I haven't seen a choppy market with this pair right now. So I'll leave you guys with that, and I will see you in the next video.